All right, good morning. It is Monday, March the 23rd, 2026. Hope everyone had a nice weekend. Yours truly was hosting Daddy Daycare for the weekend. My wife took a much deserved break up to the mountains with her mom and her sister. So sounds like they had a nice time. I had the three kiddos for the week. A beautiful weekend to be outside a lot. My son and Tyson in our office, his son, of course, we had our much anticipated season opener for 5 and 6 year old boys soccer, a nice little rec league that we are coaching. And I was watching warm-ups. And so we have 9 kids on our team. I think 6 of them have never played soccer before. And I looked over at the other team during warm-ups, and I think they're like all 6-year-olds, and like they're juggling the ball, keeping the ball up. I was like, oh dear, this is. I'm an optimist, but this isn't looking great from the start here. So, nonetheless, it was a long game, but I think the boys tried hard, and they certainly had fun. So that was fun to see. We'll keep working at it. But besides that, another eventful week in the Middle East, and really, mostly the same headlines, right? Concerns about oil supply, higher prices. And so looking at markets last week, like Monday and Tuesday, you saw nice gains in the U.S. market, only to see the market kind of give those gains away into the end of the week, and then actually turn negative. And then this morning, very early this morning, I looked at equity futures again, under some pressure, right down another percent or two, and then get to the office only to see that markets had reversed higher, like a 4% reversal, to see it a couple percent higher when I got in the office here on reports that the U.S. and Iran are in talks to make a deal. I don't know. So we'll see what that means and if that comes to fruition. But it really is just another example of why you cannot try to time markets, right? It's just it's a loser's game. There have been a number of studies that just show in the long run it just doesn't work, right? When you try to time markets, you need to get it right twice. A lot of people forget that, right? So if you go to all cash, like when do you get back in? And it's a losing proposition, because you're always just one event, one headline, one tweet away from markets changing directions. So with that being said, like, it just, in my eyes, I mean, we're certainly not out of the woods yet. And a good question to ask yourself, like, what is my plan if global markets do continue to head south, right? If you're approaching retirement, or you're in retirement, like, do you have that war chest of cash and bonds? Do you have 5-6 years worth of income that is out of that's not in equity markets, right? Because I think our human minds, we're so prone to that recency bias, and the market's been so strong for the last 3 years. Actually, the newsletter that'll be getting sent out here next week, I touch on this a little bit, but we're just so familiar with the recency bias, and we put such a weighting on things that have happened recently that people forget, like, markets are risky. In the short term, markets are really risky, and this thing could keep going 10%, 20%, 30% lower, and it probably won't, but that's a very real risk that could happen. So important to ask yourself a question like, what is my plan? What is my retirement plan if we do get a market scenario that looks like that? And if you're a younger professional that's still in your earning years, like, what's your plan to save? If we do get a downturn in markets. So just those good questions to ask yourself, anytime that volatility comes up, because you want a proactive plan in place, right? You don't want to be reacting to markets. That doesn't work well. The other just noteworthy headline from last week, Federal Reserve meeting. As expected, the Fed leaves rates unchanged, right? So no change there. Something that was new to the market, though, and this all kind of ties to the Middle East, just the uncertainty of what energy prices might be with oil. Currently, no rate cuts are being priced in for 2026. All right, so coming into the year, it was like maybe there'll be 2 cuts, maybe 3, and as of this morning, right now, the bond market is pricing in no rate cuts. So we'll see. Who knows? Maybe with this, if the U.S. and Iran end up making some type of deal, was the headline in the last hour. Maybe some of those inflation concerns subside, which then the Fed is more so just worried about employment. So maybe we do get some cuts, but that's what makes markets. Lot to go over there this week. A lot of interesting pieces to digest. Last thing. We're going to be following up with a lot of action items from our reviews. Again, review season was just awesome here over the last handful of weeks. And so questions, comments, concerns on any of those follow-up items, let us know. But we will be in touch here in the coming weeks. And also happy spring. What a beautiful time of year. The azaleas are just popping out there. So, all right, have a great week. We'll talk to you soon. Thanks.